right. And Facebook is a lot of hype and so forth. I think the valuation is on the high side.
Well, now, Ibrahim saying the reverse.
I'm not saying that you can't make any money. Maybe someone who buys at the opening, you know, he is a flipper, he may make some money and so forth. But it doesn't meet my criteria of undervaluation, let's put it this way.
Meaning it's overvalued.
I should have bought 4 years ago when it was still private. I wasn't offered. Yes, I don't know why. But maybe I would have declined also.
You know, you say, okay, Google was that much quicker, but don't forget, I mean, the relationship one has with Google is vastly different to one with Facebook. Facebook is far more interactive, therefore it's much more deep-seated, therefore you can get more in terms of revenue per user, etc.
Maybe.
And the growth is yet to come from the likes of India still at the moment, and indeed this part of the world. Asia will be a key part of it.
I have no doubt that it's going to grow. The question is by how much and how much money they will make.
Exactly.
Unlike online gambling would greatly help Facebook. That would be a huge plus.
US authorities might have a thing or two to say about that.
Yeah, maybe, yes. I guess so.
But it all depends on the price, right? Because people are talking about how expensive this price is going to be. I mean, and how much do Asian investors get allocated, which I suspect will not be very much. So how do you even buy into this IPO?
Look, I don't know. All I'm saying, it doesn't meet my criteria. I like to buy assets that are neglected. Okay. I was recently in Arizona. And I was
Where is this going? Okay.
No, previous to that, I was in Canada. In Canada, in the cities, you have boom conditions, and the real estate prices are very high, maybe 4 or 5 times as high as in Arizona. In Arizona, you can buy a beautiful house for $150,000. This is undervaluation. This is not everything has collapsed in Arizona. And therefore the valuations are now very low for homes. What can you buy in Hong Kong for $150,000? Now, I agree that in Hong Kong there is Susan Lee and doesn't exist in Arizona.
Right.
So that's a big difference.
Yes, that's a brand premium.
But she exists everywhere, really.
Yes.
In a metaphysical sort of way.
Yes.
Okay, so if this is not actually something that meets your criteria in this space, what does?
Well, basically, what I've been doing recently, at the end of last year, I bought some Swire in Hong Kong, Swire Pacific, Song Kai Properties, and Hang Seng Bank. And then in Thailand, we had a collapse of the industrial estate companies because of the flooding. So I bought some Rojana and Ticon Industrial, because they have very high yields. So I think, I mean, the markets, they're moving up. We have a tidal wave of liquidity being injected by all the central banks around the world. And the economies may not do particularly well, but asset prices one way or the other can go up. Now, the big thing is this. In the 70s, when you printed money, it went into wage inflation and consumer price inflation. Now it goes into asset price inflation. The trick will be to get out of assets at the right time.
How do you know when the right time will be?
Yeah, that is precisely the point.
When the bubble bursts.
That is precisely the point. And also you have one bubble after the other. You understand? You print money here, and then one asset class goes up, say stocks, NASDAQ, until 2000, then the real estate market in the US until 2007, then commodities, and more recently art prices have been very strong on the high end, wines and so forth. And so the trick is really to move your money from one asset bubble to the other.
Are we close to a collapse in any of these bubbles yet?
Well, I think the stock market this year has started in a similar way as in 1987. We're up in emerging markets by 11.8% in January. India is up 19%, silver is up 19%, gold is up 11%, and so forth and so on. So if this continues, we're going to get an overvaluation somewhere between, I don't know, March to June of this year. and then we could have a big setback in the second half of this year.
Wow.
We've got to leave things aside of the break, but I've got to say I found another website for you. It is called the MARC FABER Appreciation Society. This is another,
that's a wonderful one.
And I love the first comment on it is actually try a Ukrainian woman for a trusted marriage and a trusted marriage service, Mark. So there you go. You do attract just the right crowd.
Lots of likes. Lots of likes.
I mean, this is all new to me.
I think you want to just kick things off with a look at...
Glencore.
Yep.
With a close to that agreement.
Xstrata. Now, is this a big surprise to you?
No, I think it's been rumored for a long time, and I think it makes sense that the two would combine. Both companies are very successful, and Glencore is already, I don't know how much they own, but is a large owner of Xstrata.
That's right, and this deal could value this combination, this combined company, $82 billion. And this announcement could come, and this deal could be sealed sometime this week. That's pretty quick, don't you think?
Well, I mean, as I said, it's probably an agreement between the two companies, so it's not a hostile takeover.
But does the timing make sense to you? Like, why right now?
Well, basically, I know Mr. Glasenberg. He's very positive about commodities, and especially copper. So they may feel that a takeover Xstrata is desirable at this stage.
What about the mix here? You know, because it does seem like, well, I get your opinion. What do you think the fit's going to be like?
Well, I think that in all the resource space, in the resource sector, you will have a lot of consolidation. And by the way, I think that this is a supportive fact for the markets. We have lots of companies with a lot of cash, and they are acquiring other companies. So every day in the market you can see companies buying another company. And I think particularly in the mining industry, what you will see is the big companies, the Newmont Minings, the Rios, the BHPs taking over exploration companies.
Do you think we're going to see this in other industries as well?
Yes, everywhere. Because what is remarkable about the recovery since 2009 is that employment has been very disappointing in the US. In other words, we still have very high unemployment, but corporate profits have rebounded and are at the record level. So you have lots of companies, they have a lot of money, the cash flows are very strong, and they have the funds to purchase other companies. So that will support the markets in a sense that a lot of companies that have falling share prices, they will become acquisition targets.
Well, I mean, following this reasoning that companies are sitting on a lot of cash right now, one of your comments here is that there is a bubble in the safety of government bonds. I mean, that being said, do you think blue chips are the way to go, or to hide your money?
Well, basically what I think is happening is people have rushed into cash and government bonds because they perceive cash and government bonds to be safe. And they are in government bonds in the 2-year notes, in the 5-year notes, because they don't trust the banks. But in the meantime, the yields are so low, even on the 10 years at 1.83%, 10 years treasuries, how much will you earn over a 10 years period? The 1.83%. Now, I'm not ruling out that, like last year, on the 30 years treasury bond, you made 30% last year. Yeah. But going forward, I think the yields will be minimal, whereas if you buy shares, I think over a 10 years period, my return expectations would be, say, around 3 to 4% in real terms. So, say, inflation is 5%, so 4% would be
3 to 4% returns.
In real terms,
yeah.
inflation adjusted. That is the long-term return of equities, about 4%.
That's the boom, and we've got the gloom.
No, I'm ultra bearish, and I think sometimes I feel like jumping out of your windows.
Please don't do it.
Here. But if you are ultra negative about everything, and you think that there will be a systemic crisis in future, what are you better off in? In equities, real estate, bonds, or cash? I think most companies will survive. Some will fail. And we have, big changes in the world.
It's not just a truism.
I beg your pardon?
It's not a truism.
Well, the thing is this. If you look back at, say, the history of Germany over the last 110 years, you had World War I. Then you had hyperinflation, World War II. cash holders and bond holders lost their money 3 times. But if you own Siemens or you were a shareholder of some blue chip companies, at least you still have something. May not have been the best investment, and you had a lot of volatility, but you have something.
Okay.
So all I'm arguing is, if you have a diversified portfolio of equities here in Asia, I think the return will be much higher than from US government bonds and cash, because the central banks are all going to print so much money that cash will continue to yield, for sure, in real terms, -3 to 5%. In other words, you get today 0% yield, and inflation is 5%.
Okay, are you also here, Mark, talking about corporate debt as well? Is it worth buying that? Because, I mean, bondholders, if you have a problem, are always the first ones who get repaid back rather than the equity.
Yes, but I own some corporate debt, but I have to point out, corporate debt, especially the ones I own, the bonds, these are high-yield bonds. They are not the best quality. And they yield, say, 6-7% or so. But they have a very strong equity component. So if the equity markets go down, like in 2008, these bonds also depreciate in value. Or last year, when the equity markets went down after the May peak, these high-yield bonds also went down in value. They have rebounded.
So what sort of yields did they go up to?
Well, they went up, I mean, in 2008, early 2009, they went to 12-15% yield. And today, you still have Russian bonds, Ukrainian bonds, and so forth, of the corporate sector that yield, say, 12 to 15%.
Okay, well, let's get back to the equity space, because last year when we were speaking after the September sell-off, and, you know, it looked like the world was imploding, you said that we weren't going to get new highs. The markets were oversold, but they'll rally again into the year's end, and that's what we got. So how about for this year? What kind of highs are we going to see?
Well, I mean, we haven't made a new high on the S&P above 1370 on May 2nd, 2011. So, you know, that high still is somewhere in the future. And in emerging economies, I think it will be very difficult to make new highs.
Right.
Now, we had a very strong rebound. I think February will be weaker. In other words, we'll have a correction during February. And then another rally into April. And then depends how the rally will, what the volume will be, and what the technical picture will be. But I think that, like 2011, 2012, could first have a strong opening, in other words, until April, May, and then disappoint. And I think the political position in America is also something to consider. I happen to believe that Mr. Obama will be re-elected.
You happen to believe?
Yes, because not because I'm a great admirer of his skills, but the absence of anybody else that is much better.
Right. The incumbent usually wins 70% of the time.
Yeah, I mean, basically, I think the Republicans haven't brought anyone really forward that is a desirable candidate, and the one that would be desirable, Ron Paul would be a very good president.
That's because you don't believe the Federal Reserve has any, you agree with him in many
things. Wants to audit the Fed.
Yes, I think that would be very useful. Audit the Fed and audit Fort Knox. Check the goals.
Yes, and you would personally, wouldn't you, Mark?
Yes, I would go personally for that.
I'm just curious about Europe very quickly, because there's a lot of talks that Portuguese bondholders may be next to take a haircut. Do you think Portugal's going down that road?
Yes, for sure, for sure. I mean, the reality is Greece is bankrupt. The bondholders should essentially take a 90% haircut. And Portugal is not quite as bad in a position as Greece. But they're also in trouble.
But is there something that they can do very quickly just to avert?
Well,
because
you know,
they're on this path, as you mentioned.
Well, they've done already a lot. The ECB, directly or indirectly, has been supporting these countries by buying the bonds. But you understand, you just postpone the problem, you don't solve it. And this is what that's why I told you I'm so negative, because I think the problems are not being addressed, but the symptoms of the problems are being addressed with medicine that alleviates the pain. And it postpones the pain.
Right, but you shouldn't fight the trend. That's the trend right now.
And I believe the whole financial system will have to collapse one day massively. Massively.
This is the doom again,
Because, you know,
isn't
we
it?
have these
And the gloom.
derivatives outstanding, $750 trillion. I mean, this is not going to exist forever in future. One day it will be over.
Okay. Well, let me know when you feel that
But
day is
I
near.
have good news for Bloomberg.
Oh,
If
yeah?
I were Bloomberg, I would now start like Facebook Interactive.
Facebook
Yeah,
Interactive.
and then you can go public and have a valuation of, say, $1 trillion.
Okay.
Brilliant.
Be something to look forward
We are
to.
interactive
Yes.
anyway. Anyway.
Dr. Faber,
Yeah.
good to see you. Thank you so
Yes,
much for your
it's
time.
my pleasure.